Good afternoon and welcome to this week's update from Your Future Strategy. Just a quick update this week. Firstly, it's an update on the JobKeeper program. Also wanted to touch on superannuation and early release, as I've had a number of clients ask me about that during the week. And finally, just an update on the Australian share market and how it responded through the month of April. So the first update this week is the extension of the JobKeeper program. So the announcement from the Australian government is that they had previously said the minimum payments to employees for April needed to be paid by the 30th of April. They've extended that to the 8th of May. So you can retrospectively get the JobKeeper payment from the 30th of March and have till the 8th of May to cover those payments. And you also have until the 31st of May to enrol in the program, whereas that was also previously the 30th of April. As I said, one of the questions that I've had a number of times this week is around superannuation and the question of whether to access the $10,000 in this financial year and another $10,000 in the 2021 financial year. So the conversation revolves around the impact of taking out $20,000 from your superannuation now on your retirement. So the graph that I have here shows $20,000, and depending on your risk profile will depend on what your average annual return will be over, say, a 20-year period. And what you can see from this graph is because of compound growth over the 20 years, $20,000 on an 8% compound growth would be worth $93,000. If you got a 10% growth rate over a 20-year period, it would be worth $134,500. So the question isn't about whether to take $20,000 out of your superannuation now. It's whether what the impact would be to your superannuation balance in retirement. I've had a couple of clients where the scenario is to take superannuation out to invest in their own names, and if they have the discipline to do that, it may allow them to retire early before they can actually access their superannuation. So may be a strategy that's suitable for certain people. To withdraw $20,000 to pay off personal debt at the expense of $134,500 in 20 years' time is really the trade-off or the consideration that needs to be made. A quick update now on the Australian share market, and I've got some graphs here and some charts just to show you what's been happening through the month of April. So as you can see, throughout the month of April, it's jumped around a bit, but overall you can see a trend upwards where we're starting to see some recovery from the losses during March. So if I extend out that chart and show you both March and April, you'll see we came off relatively high. We had quite a strong share market coming into COVID-19 crisis, up around 6,500 points. And now we've started to see that recover, drop right down to almost 4,500 basis points, and now it's up around 5,500. So starting to see that trend. What I wanted to show you was what's actually happened since the 1st of January last year. And what you'll see is that we had a steady upward trend. As I said, the market was going strong and then fell off a cliff in February as the announcements were made around the COVID-19 virus. The reason this is important is that you'll see that if you compare January 2019 through to 30th of April this year, we're sitting around about the same level. So what that means is that the gains, if you had been in the market since January last year, you would have seen steady gains throughout the calendar year last year, that quite significant drop, but now it's starting to recover and sitting at the same level. So the gains that you had made over that last 16 months have been wiped out, but basically back to the same position you were 16 months ago. So really from here, you can see there's some ways to go to recover back to the high that we had before things dropped away. But it is good to note if you've been in the market, then what we've done is basically reverted back to the same levels we had at the beginning of last year. Quick update on the property management side of the business. As we've talked about previously, we had reverted to initially starting to conduct routine inspections virtually. Given the restrictions are starting to lift, we are talking with tenants about conducting those physically. If they're uncomfortable, there's a risk, health risk, then we are still continuing to do those virtually. So it will depend on the circumstances of your tenant. So quick disclaimer, as previous weeks, the information is just general in nature. Please always contact us and see how it applies to your own personal circumstances. Thank you, and I hope everyone has a great weekend. For those of you in Queensland, enjoy the long weekend and the easing of the restrictions.